Back to the Scinary Information Nexus, your podcast of sin.
Thank you very much. There's been a slight change to our podcast.
Slight change?
Slight change. We're on camera now.
Yeah, we're no longer incognito.
We are no longer incognito, so you can put faces with names for your target list. And speaking of names, I'm joined as always by our SOC managers, Joseph Hamilton and Mario Ortiz. Say hello, fellas.
Hello, fellas.
And also our director of strategic initiatives, Brazos Wortham. Say hello, Brazos.
Hello.
Brazos.
So last week we were sponsored by Southern Roots Brewing Company, and evidently this week we were sponsored by Southern Roots Brewing Company again.
It's because we never drink enough.
We did not.
That's what I've always been saying.
Too much beer, right?
There's never too much free beer.
And we are absolutely thankful for Southern Roots. And they're y'all gave me the Hawksbill Hazy. Okay.
Yeah, you'll be fine.
Okay. But this week we have an additional sponsor, which is Adira Technologies by way of Dr. Jack Green and Gaitha Milligan, who was kind enough, Dr. Green specifically was kind enough to send us a bottle of Blanton's whiskey, which is not full anymore.
No.
We got it.
We got a primer to the episode this time.
It did not take long from the package being opened to having glasses in our hands and sampling the product. So,
and I because we are Scinary and it is on brand, it's like, okay, go get some glasses, not paper. Like get actual,
Oh yeah, no, something
porcelain.
like this. Yeah, it's got to be in a nice glass.
Yeah, feel fancy.
Mm-hmm.
So
it doesn't, it's not as nice that all your glasses had the Batman logo on it. But
so I do have a question for you guys. Whenever you see like a really nice bottle of whiskey, like Blanton's, and you see somebody shoot it, what's your opinion of that person after that?
like what do you mean? Like just disregard the flavor and taste?
You're talking about shooting it like this.
Yeah.
Okay.
Not a gun.
I thought you were talking about taking a revolver and taking out the bottle with liquor in it.
Well,
and I was like,
I am
that's a
drinking
travesty.
Gunfighter India Pale Ale. So, but no. I mean, when you have a really nice bottle of like Blanton's, or maybe like Pappy, or maybe even a shot of not tequila, but because tequila you do shoot, but like scotch, and they just instantly shoot it or take a shot of it. What's your opinion of that person?
They know how to party.
Honestly, there's a sense of pity. Yeah. They're missing out on something. I've done that before. I was able to get some Macallan's 25 year, and I was doing it with some friends, and one of them just took it and shot it back.
I don't know.
I was like,
I don't know why y'all are judging.
It makes it taste better.
It does.
I mean,
Yeah, after probably 3 shots.
That's right.
because if the person is used to drinking like crappy whiskey, and they get a really nice bottle of whiskey, they're going to default to their,
I look at liquor as a flat rate investment.
Okay.
Of dollar cost to time. If you give me a $5 shot, it's going down in about 30 seconds, right? Maybe less, obviously, but I mean, like the most 30 seconds, right? Whenever we start getting $125, $200, like a shot of this, an ounce and a half pour of this at a restaurant, you're paying in the hundreds at least.
Yeah.
Right?
Well, $50 a shot, probably.
Right. So at that point,
You know how I know? Because Brasman and I did it in Virginia.
They were doubles.
well, so at that point, that's no longer a less than a minute drink for me. I have to keep my flat rate of enjoying my time, dollar amount per time. And so that's now a 30-minute experience.
Yeah.
What's your opinion, Mario?
My fruit punch tastes pretty good. I don't know. I would say it's a bit light. It's a bit light on it. Not as hot.
Well, to keep us moving, thank you, Adira Technologies. If there's anybody that listens to this podcast in Oklahoma and you need technology help, especially if you're in the local government sector, K-12, higher ed, Adira are the folks that you want to reach out to for consultation and help. They got a full service technology shop. They partner with us. They're one of our best partners on the planet. So if you partner with them, you're kind of automatically partnering with us as well. So again, thank you, Gaitha and Jack, for the bottle of whiskey. And let's move on with the show. So we're going to do this a little different than we usually do. So typically, what we would do is I would research a topic, and because I wanted your like unfiltered opinion of it. In podcast past, I would say, okay, we're going to talk about this. What do you guys think? Right. This week, I wanted to get a topic that we could actually research, sink our teeth into, and it's something that we all talk about collectively, especially in the Security Operations Center. And I believe that it's a topic that we do need to discuss because I think there's a veil of there's a haze around what we're going to talk about, and that is venture capital money. Specifically, what we're going to talk about is what is venture capital money? How does it come to be? Who are the venture capitalists? Where do they come from? And what sort of transparency or lack thereof is on those funds? And I will start with some stats, and then I want to toss it to you guys for any kind of opening remarks that you have. So 3 out of 4 tech startups that are funded by VCs. I got domain controller on the brain.
We always do.
Yeah. 3 out of 4 startups funded by venture capital, they fail.
Mm-hmm.
Mm-hmm.
Almost always.
Yep.
So statistically speaking, that's worse than the odds of getting drunk and trying to put together an IKEA table while being chased by bees.
Experience?
How do you have that stat?
Richard's first law.
Richard's first law. In the absence of data, make shit up. Yeah.
Cheers.
Yeah.
Cheers.
So truly, since there is a published stat now, and I've got links, and we'll put the links in the podcast episode. But why, if 3 out of 4 tech startups fail from venture capitalists, first of all, why do they fail? And second of all, why does VC money keep going into tech startups?
Mm.
Yeah, so I actually do similar. I wanted to figure out exactly what the statistics of some of that was as well. So whenever I was looking at it, that was a key area of my research. And so similar to I think you said 3 and 5, just to put percentages onto that, it's close to 75% of all venture capitalist investments end up in some form of loss. And then out of that 70, or the rest that's left over, only about 5 to 7% actually have any form of noticeable gain, right? So even in that what's left of 25%, you still have things that are not necessarily notable, but they're not losing money, right? Well, the thing is that what's key is that 5 to 7%. And the reason that is key is because the 5 to 7%, just to give you an example, if you have 10 companies that you invest, let's say $3 million in, and out of that 10 companies, 8 of them fail, 1 of them does okay, but the last one turns into $1 billion company, it makes up for all of the losses of the previous 7, right? And so this is that's the reason the money keeps flowing in, is because
the return is there.
The return is there. You can have so many of these fail, these ventures, and you have one that turns out to be a unicorn.
I will say though, there was another thing that I was looking at that said that really over even a 20-year period of time, there's maybe only 10 or 15 companies that are actually that unicorn, right? That thing that they're looking for. And so what that means that is there's a lot of venture capitalist firms and companies, but there's only a few successful venture capitalist firms and companies because everyone's trying to follow It's called the power law in that world, which is this idea that I invest in a bunch, only few are going to make me actual returns. But that's literally like they optimize for that kind of chart in their portfolio. But because they do that, and because everyone does that, and it's a law of how venture capitalism works, it makes it to where there's only a few, because it's basically luck as to, because they don't even invest in companies based off of necessarily 100% of what they know, because at this point, they don't know the company well enough in order to be able to make a decision about whether it will actually be successful or not. They're literally just throwing money at a wall and then seeing if they happen to hit that one that's going to be the right one.
But who's throwing the money at the wall?
I mean, what's funny, I didn't do research specifically on a lot of the individual companies per se.
Oh, I did.
Well, hopefully you'll be able to cover that in a little bit more detail, but I do know that they're largely located in where you would expect, Silicon Valley, California.
Yep.
So and funnily enough, New York. There's quite a few in New York as well.
Silicon Alley, I think, is where they're going.
Yeah. Well, and I did... Real quick before we get into that, I did want to mention one thing. The mentality behind the power law is the idea is you can't actually do your due diligence, because what happens if somebody acts first and then they get the unicorn? That's kind of the mentality behind that, of just like throwing as much stuff as quickly as possible to things, because if you don't, your competitor is going to do it, and maybe they're going to win out on this like unicorn that they grab, right?
So one of the issues that I have is that, let's say I invent a banana and I put Wi-Fi on it, right?
All right.
And I need to value that banana in the market. So what am I going to do? I'm going to hire a firm to do a valuation. Right, I'm gonna get a valuation from a third party. What's the problem with that? I'm paying for the valuation. If I want that valuation to be in a certain range, what's the incentive for the third party to say, I'm sorry, I can't provide that range to you, right? Well, I'll just go to the next valuation firm that can.
I feel like there's some very famous people who have done that in order to adjust their valuation for like tax purposes or something like that. I don't know. Yeah, I'll leave it at that. We'll let the audience look into that one a little bit.
So I want to talk about how it all starts, right? Because there's a mechanism to make a VC fund. And that mechanism is, at least in the United States, you've got to form a limited liability partnership, right? And then what you do is that limited liability partnership, or an LP, a limited partnership, is the fund, and then you've got to have somebody to manage it, which is called the GP, the general partner. That general partner is the one that manages it, decides how the money's going to be invested and all of that. But the LP is what takes in all of the funds, right? Typically, a VC, it could be a VC fund, depending on if it's new or if it's been around a while, could be anywhere from $10 million to $100 million. It's pretty large, but usually $10 million is about the minimum that you need in a VC fund, right? So I wanted to understand how to do that. And evidently, it's not that difficult. You can form an LP and then form a GP. The hard part is going to get the money.
Yeah.
Right? Going to get the money. So where do you guys think the money comes from? Which is an interesting thing.
So so the one thing about the investment world, which is interesting, so like outside of like VC is firms, right? Like they're established firms, they have regulatory requirements around being a VC. A lot of times what you'll see, there's a difference in VC and like angel investors. Angel investors typically are individual people, private entities, private individuals that have made their money through entrepreneurial gains themselves, and then they decide to invest in companies. I would assume, right, that a lot of times these venture capitalist firms kind of form in the same way where you've got, but it's like a conglomerate of a number of angel investors that come together with their large capital reserves that then decide, well, we're just going to, form an institution that's just going to go ahead and do this, right? Kind of the idea of just piling resources together to make more money, but I don't know. That's my assumption.
Well, and to me, that offers a level of distance, right? And this may be where you're going with this, but there's a level of obfuscation there because does a VC have to report all of their investors?
Absolutely not.
Yeah,
it depends on where it's formed.
Yeah.
I will say that there are a number of regulatory requirements for like venture capital, like that does exist, and that's why there's also like one of the things that I did in my research was finding, and I'm sorry, I'm taking your section here a little bit, is because I really wanted to understand like where VCs played, like at what stage do VC, because my assumption was, and looking from the outside in and not really having a deep dive, was that they were just involved in every startup and every time they came in, they were the reason that these startups existed. Well, it turns out kind of, but not really. Like the start, like they come in after a startup has been founded typically, and they have an idea and a project and they're working towards it. And maybe they even have like a very early prototype. But then when they have that early prototype, that's when VC funding comes in a lot of times. And they bridge the gap between the early startup stage and the IPO or acquisition phase of the thing, because literally their whole thing is, in terms of valuation, is to try to pump up the valuation of this company as much as they possibly can, so that whenever it either goes for IPO or gets acquired, that's when the VCs exit.
So I think we need to pause on that point, because it's a very valid point that we need to talk about. That the whole goal of VC funding is to get it to IPO or get it to such a valuation that they can wring out. It's never about the product.
So
not at all.
They have short time scales for the requirements they have on the company, and they have large returns that they require. Like the profit has to meet a certain goal.
I could not imagine being a CEO of a tech startup that's funded by venture capitalists and private equity, because the amount of pressure that they're going to put on you to do that. I mean, you're doing booger sugar like every night.
Yeah. I do want to put like a distinction on between VC and private equity. They are different. There are different regulatory requirements to private equity than VC, and the reason I want to make that distinction is, and we can get into this in a little bit later because I want you to finish like your point. But I think the VC landscape has changed within the last 4 or 5 years because of private equity. But again, we can get into that. I wanted you to finish kind of your point there.
I had no point other than VC. Well, I mean, and this is true of private equity. The whole reason that they invest is to wring out they're going to get their money back one way or another.
Well, and so I was reading an article, and now it was a episode of a podcast. It was on techpolicy.press, but it was
communist website. You know that, right?
It was Catherine Bracey.
She's a communist.
She had out a
allegedly.
She had out a book. Yeah. You want to put allegedly in all of that. She had a book that she was promoting that was a little bit of a takedown of venture capitalists and how it works currently within the tech world. But I found it interesting because her thing was not that venture capitalism is bad. Her thing was that venture capitalism doesn't always satisfy the need of the greater society and of even the companies. Mm-hmm. So there are a number of companies, like honestly, our company. I don't think our company would work under a venture capitalist model.
Oh, hell no.
Yeah, well, most of the time
we would never
not after this episode. Yeah.
But we would never be able to meet those goals within that time frame. But I do think that we are satisfying a very necessary niche in the economy. We are definitely catering to a need in the broader society. And we did it through, self-funding and building up over time. And sometimes that's what's necessary.
Free beer.
Yeah, that's right.
We can't afford our own beer.
Venture capitalism, if it is the way of how tech world works, is actually starting to stifle innovation because it doesn't account for the companies in the middle. You're going to have companies that fail regardless. But this model only looks for the companies that will be the sure winners, the big unicorns, the ones that are going to return the big investment.
Yeah.
But because of how they push the companies in the middle, they force them to fail.
Well, and I think there's something to be said about the idea that on the innovation side, because you need, at least especially in that like culture, it values less like an actual product or the societal need or whatever it may be, like what you can return to the economy at large. It values more a flashy product that can sell and the charisma of the person who goes to pitch it to venture capital.
Yep.
And one of the things I want to bring up in this, and funnily enough, it does kind of play into technology, but really it was a real estate company, but they tried to play themselves off technology because they knew about how much money was in VC. Well, do y'all know anything about the company WeWork?
Yeah.
Yeah,
absolutely. That showed up in my research.
Yeah, so WeWork is a funny company. They had a very charismatic CEO, like founder, and he was able to convince people like SoftBank, a gigantic conglomerate bank that had hundreds of millions of dollars, billions of dollars, that invest in a lot of things, and many other different institutional investors and VC capitalist funds to dump money into these co-working colo locations that people, we have one downtown. It's not a WeWork, but it's like 25 co-work or something like that.
Well, I think it was a WeWork at some point.
There was
in time.
something down off of like on the Brazos River.
Okay.
Basically.
Yeah. But well, I know there's very similar places, and you'll see them pop up in cities. But WeWork was kind of the first kind of big one that started up. And well, the whole thing was the dude was just super charismatic. Like it came out that he would host like these gigantic parties for all these investment bankers and stuff, and just get them to pump money into his company. It was not profitable at all. It lost money year over year. And he tried to like pivot the company, and the way he did it was pivoted by saying that the company was a technology company, but in reality it was a real estate company, but the real estate wasn't really like kinds of issues.
So where is the due diligence and all that?
There was none.
Right.
So I wonder
so
how
the regulatory framework around the VC funding is not sufficient.
Regulation.
What?
Are you advocating for regulation?
No.
On a facet of the economy?
Yes.
How much have you had to drink?
I mean, some Blanton's, a beer. But the real question is, how much has he eaten today?
Yeah.
I had a Southside burrito from George's, but I paid for it, so George's is not a sponsor.
George's, if you'd like to sponsor us.
Absolutely. But yeah, there is one of the things that I found in my research is because a lot of these things are like they're formed in like the Cayman Islands, and that is to skirt SEC and all the regulatory stuff. And of course, that's been going on for forever, right? If you want to put your money in the Caymans tax free, whatever, that's been happening forever. But what I did not know is, and I hate to do this, I really do, but it all comes back to TikTok.
How did
The longest
So-
series.
I knew we were going to start talking about like the last episode and the episode before somewhere in this.
No, it was either going to be TikTok, AI, or cyber insurance.
I was going to say
One of the
government.
three.
I was about to bring up an AI thing here. Remind me later because I got something in mind for that.
So who invests in these VC funds? Who are the investors?
Like the people who are actually putting money into
Yes.
the VC funds
Yes.
itself.
I'm going to go
So,
with
I do have a whole thing on this. One of them, pension funds.
Absolutely.
Yep.
So you know what that means?
So my whole
So
thing
my
is
whole retirement is based on a 22-year-old coming up with an app that creates another app.
yeah.
Right.
Yep.
And oh man, this is
he's
a whole thing.
And he's going to be in like a Patagonia like vest and everything. He's probably somebody I would want to punch in the face.
Yeah.
That was a really
Okay.
accurate description.
Okay. I'm going to go ahead and bring
I've
up the
seen this
AI
guy.
thing now.
His name is Chip.
because I think that fits in really well here. So much like AI, and we talked about this a little bit on the last episode, but I know we've talked about it a lot amongst ourselves of this idea that the smart people built AI up to a point to where it's now letting people who don't understand how AI works do things with AI that can help build things that like maybe even progresses AI, but eventually it's going to get to a point to where the people using the product no longer understand how it works, and it works on them in a way that it was never intended to do. But so the same thing happens perhaps in the VC capitalist world where these advertisement and kind of like social engineering quips of the trade that they've been using on the consumer for such a long time have now become the name of the game for presenting to them. And so now you have this full circle of the people at the top are not realizing that they're being manipulated by the same thing. Because I think back to how many different people I know that get constantly taken by like MLM scams or like all these like quick fix products that, oh, if you do this, it's going to fix everything for you. And they spend so much money on this stuff that is never going to work. But they have no insight as to how they're being manipulated by the advertisement. And this sounds like with the WeWork thing, this sounds very much the same thing, but working against the investors, the very people who to some degree initiated a lot of those changes in advertisement.
I
and
am
how it
not
works.
done railing on this pension thing.
Oh, this
So-
was a huge part of my whole like.
All right, I'll let you two go on it.
Yeah.
I'm done with. Well, I'm almost done with my conspiracy theories, but we'll get to the other one later.
Yeah. So pension funds. So we're talking about union pension funds. What else?
So the pension funds were the big things, but you also.
No. But the endowments.
Yeah.
The freaking university endowments.
Oh yes.
Oh,
yes.
universities.
Yeah.
Of course.
Yep.
Yeah. Yale, Harvard.
And that, yeah, I know that, and it kind of goes hand in hand. And you also have with some of the VC stuff, it's.
I just want
it's
that
an
to
Ouroboros.
sink in. Think about that. There is some knob out there investing money in bananas with Wi-Fi with your if you're a union worker with your retirement pension.
So this is my whole thing, is that it goes back similar to the whole 2008 financial crisis in a way, because of the idea that you have people investing in assets that they don't understand the underlying risk
Yes.
to.
Yeah.
So you have a whole group of people, the common people, that sit out here and they have their pension funds taken out of their checks, and then that money, the company decides that they're going to give it over probably to a private equity to manage. The private equity then goes and invests in venture capitalists.
Do you realize the Teamsters Fund funded Las Vegas through the mob?
I would not be surprised.
It was the pension money that funded the building of all those damn casinos out there.
Yeah.
Right? It's the same racket.
Yeah.
It's the same racket.
Well, you're taking the largest like grouping of cash, which is people like the average people paying in without their really with their consent, by signing off their wage deduction forms and everything
but not
else.
their understanding, which I think is a big thing.
They do not, again, 2008 financial crisis, people investing in things that they do not understand the underlying risk to. And it's through, and going back to multiple episodes, it's not the third party you have to worry about. It's the fourth party, the fifth party, the sixth party.
Right. Hey,
Yeah, which one you want?
I don't care.
I was going to say, use words, Richard.
Give me
There
something.
you go.
Give me something. So
Yeah, I'm almost through my second vanilla porter here.
so
You can
it's
see it this time.
it's pension funds. It's the endowments for universities. What's the third?
Some sort of state.
I'm gonna
Right.
Government.
Yeah.
Yeah, government wealth funds. Qatari.
Yeah.
Qatari funds, Saudi
wasn't-
Arabian.
Wasn't the whole thing? What was it? Two years ago, like that. The Canadian pension fund that was in. Was it FTX that they were investing in?
Yes.
And then that ended up like Silicon Valley Bank, First Republic Bank, FTX, all just crashing and burning, and they lost like a ton of money, like people's money.
Didn't CoffeeZilla like expose those guys?
Well,
Wasn't it CoffeeZilla that did the expose on that?
I mean, he's done a bunch of stuff, but
Yeah.
I know he covered FTX like very in depth, but I think it was like a postmortem, but I may be wrong.
Yeah.
I didn't know you
and
watch
I know a lot
CoffeeZilla.
of that. I know a lot of that happened because of the automatic trading that they allowed as well, which was a new thing that I think is still a thing.
So it's funny. Do you know why like the pension funds invest in those now?
Because they're unregulated.
Well, yeah, because they removed the law back in like the 1980s.
Yeah.
That
Well,
they
that's
used
also,
to,
Again, we needed Vegas,
yeah.
right?
I like Vegas.
well, but that's also whenever they made changes to how Social Security was funded and a bunch of other things.
Don't get into that.
But my point is I don't know. It's almost like there was a president right before then that did a bunch of deregulation, and it was all supposed to be really good.
Do
and all this
not say anything.
Was it trickle
You
down?
better not say anything. All hail Ronald Reagan. Best president ever.
Ronald Reagan, if you want to sponsor us.
Do the Reagans have a pension? Do they want to invest in like
there's
a
probably
tech
some
startup?
sort of
Scinary?
Right.
trust fund.
You just
equity.
cut out all the middlemen, just have the Reagans fund us.
I'd be okay with that.
Okay.
I'd freaking get a
Beer
get a-
just went over my
Splash Zone. Yeah, I
iPad.
was going to say Splash
Yeah.
Zone.
The last time you opened it, there was a big splatter. I don't know if it's that 6-pack or if the way you open
Yeah.
it just is volatile.
So
Explosive.
y'all know we've got the equivalent of a small country's GDP in equipment sitting here, and I just looked over and this thing was on purple. And I was like, crap, we're not recording.
Yeah, no, but that one's recorded.
Yeah, but that one's recording. So
That's the important one. It's
we were
okay.
saved.
So one thing we've also learned going to a number of conferences is it does not matter what kind of tech company you are. No one knows how AV equipment works.
No, I agree.
Yeah,
I
it's
agree.
magic. Well, it this isn't technology; it's AV.
Yeah.
Right.
Yeah, no,
It's
it's
completely
it's
different.
like printers. Printers are their own thing.
Yeah.
No
All right.
one really does printers.
But believe it or not, we're not finished ranting about venture capital.
Yeah, and I do really want to go. I want to say one last thing about the pension funds, and that being, or well, in this particular space, I mean, with the VC capital, I mean, it's high risk, high reward, and if it was just multimillionaires and billionaires playing in their own little area, honestly, that wouldn't really be a problem. The issue comes down to the fact that it does affect the common people, and they don't actually understand how it affects them. It is hidden behind multiple layers of stuff. And in some cases, like the Canadian pension fund, it does actually have ramifications when stuff goes bad.
Right.
And I do wish there was a more transparency, or at least, again, the acknowledgement or some sort of thing. And I guarantee you it probably is somewhere like buried down in subsection C, page 502 on whenever you sign that little thing of your in your deduction form.
Yeah, we can
or
do a whole
pension
thing
fund.
on end user agreements and
Yeah.
like the various electronic
service,
contracts you
EULA.
sign nowadays, which may be a good episode later. So I think there's another thing, and this may feed into more of what you have. So I wonder about confirmation bias here of the people that have to report are your public institutions, are your pension funds, are your education institutions. You talked about the veil of venture capitalism and how
Yeah.
you don't necessarily know who all's putting in the money.
Exactly.
So these large proponents of venture capitalism that we see as being the major ones are the ones that have to report that they're putting in money into venture capitalism. I wonder how much of the unseen portion of it are the ones that are the more like, and this gets into conspiracy theory I talked about yesterday,
Oh, Lord.
whenever we were kind of teeing all this up amongst ourselves, of this idea that maybe large companies like, and I'm not saying these specific companies are doing this, but like Apple or Google are taking their funds, putting them through like a Cayman Islands shell corporation.
So Google and Apple do not have to do that.
They don't.
Right?
corporate venture capital. It exists, CVC.
Okay.
Yeah.
Okay.
So, and Google actually has their venture capital fund. It's called Google Ventures, JV. And I have a whole section over corporate venture capital as well. But I don't know if Richard has something because he seemed to perk up on that too.
No. I wanted to steer the conversation about where this money's coming from. Who's actually, so we talked about pensions, we talked about endowments, we talked about state-sponsored wealth funds, basically. Qatari, Saudi Arabia.
Right.
Yeah, it was sovereign wealth funds.
Sovereign
right.
wealth funds, right. Those things. Did you know that China also has VC capitalists?
Oh, yeah. It's a
of course.
huge market. They're the second largest behind
if they
the
can get
American.
the innovation here, the only place they can manufacture is in China, and then they go and manufacture in China, and then China has the IP.
So I do want to put out something that's really funny here. Both me and Richard did not collaborate on any of this research, but I happen to feel we read basically the exact same papers.
Probably, because what I want
I
to
want to try a hazy.
Let's see if I can open one of these. Because last time I hey, I got it.
There you go. So, what I want to talk about specifically with the Chinese, the TikTok ban, right? Again, how insane that is when you've got Chinese venture capitalists investing in SpaceX
Yeah,
and in Tesla
probably OpenAI.
and OpenAI, right?
It's weird how they get DeepSeek.
I don't know. I have no idea.
Well, so I heard,
Allegedly.
I don't know if this is true or not, but the iPhone in China is not an iPhone. It's actually got a pear on the back of it instead of an apple. So
I don't know if that's a real thing because they also use the pear in all Hollywood, and it's because Apple.
it's because they're buying them from China.
Well, also
Because
Apple,
everybody in Hollywood's communist.
Apple has an ongoing deal with Hollywood that does not allow any villains to have an Apple device.
I do
So-
know.
Oh, that's horseshit.
So villains will sometimes have a Pear device
That's horseshit.
because
I
they
don't believe that.
cannot have an Apple.
I don't believe that at all.
It's an ongoing because Apple has to release rights to use their product in a film, and they refuse to do it for any villains. If it is a bad character, they are not allowed to use an Apple device.
Y'all heard Hollywood. All bad guys use Androids.
I mean, pretty much. That's well. It's either that or the Pear.
I mean, give you more control. I mean, put graphene on it, OS on it. You can't be tracked. I mean, makes sense.
So the Zen Fund, Source Code Capital Today, and Miracle Plus, those are all Chinese VC firms. They're invested in various stealth AI companies in Texas, formed in the Cayman Islands, running under the radar of U.S. regulators. Of course they are, right? Somebody's going to give you, $5 million and say, look, put this to good use. I was never here type thing. Obviously, you're going to use that money. Scinovation Ventures, again, investing in USAI. You see where I'm going with this?
Yeah.
And you want to ban TikTok?
Yes, you're saying the auspices of neoliberalism in our
He's using those big
post-Reagan
words again,
era
Richard. Be careful.
Dude,
has solely deregulated.
I
us
live
to
in
such a
Golson.
point
I don't even know what
now-
that means.
that now all foreign entities basically have a say in how our country is both governed and our economic future.
I will say on that front though, like very similar to what I was saying previously, is it's probably very similar. Like our like venture capitalist firms here probably put a lot of money into foreign investments as well.
Oh yeah.
So
I'm not saying that
maybe
it's
not for long.
I'm not saying that it's an issue. All I'm saying is why you want to ban TikTok over national security issues.
There's other things.
Yeah, there's other things. That's what I'm saying. It's the hypocrisy of the entire damn system, right? These sovereign wealth funds. There is no damn way that I would take money from a foreign country, France, the UK, Ireland. I may take money from Ireland, but that's
Ireland's pretty cool.
yeah. But that's about it. I would take inside investment from the United States, right? Because here's what it's the enemy that I know.
But here's the tricky part. Because of how the venture capitalist system works and even other investment systems within the country, you don't always know that domestic entity you're taking money from isn't majorly funded by a foreign entity. Yeah. And it's very hard sometimes to find out that is the case.
A lot of times, like if you look at some of those corporate like structure trees, like they're highly complex because of that exact reason, is trying to obfuscate exactly who owns or who's an investor, who has control
right
over these organizations. And so it's like, it's hard to figure out. Like it is extremely difficult, and they make it that way. So
yeah. I mean, that's the whole point in obfuscation. I mean, we see it all the time in PowerShell and code and all that stuff. Why do you obfuscate crap? To hide it. Yeah. There's only one reason for that, right? It's not, well, I don't want anybody stealing my IP. Well, nobody's going to steal your IP. Just tell us where the money's coming from, right? That's all we really care about. And I will go on to say we absolutely need investment for innovation, right? There is we need money in innovation, but it strikes me as odd.
Well, what's interesting on the innovation standpoint, and I read one particular paper that was talking about that exact thing, is like the idea of how much. And I go back to what I said at the very beginning, is where is venture capital's stage in a startup's like life cycle? It's not at foundation.
It is not.
It's after foundation, and that innovation has already occurred.
Well, it's in the pitch deck, right? That's it. So whenever you're bananas with Wi-Fi's, right? You put that out there, you sell it a couple of hundred times, whatever it is. You've got a good business case at that point. So you put together a pitch deck and you go looking for VC capital.
Yeah.
And that's when the investment occurs. But that's like initial investment. And then again, we did the same research. It sounds like Series A, Series B, Series C. And what that winds up doing is diluting the stock and the value of the company by the founders.
Well, yes, the founder, like even at the eventual, like when they get the very first round of funding from VCs, the founders are already losing a lot of control over the company. So it's something like the whole limited partnership and and a lot of times there's very strict controls over what the founders can then do once they get the VC funding. A lot of times it's like you can no longer sell the company, or like specific strategic decisions are only
timetables.
Are only available to the VC firm. But then if another stipulation a lot of times within these contracts is, let's say you invested $3 million as a VC firm and you go to Series A or Series B or Series C. Well, one of the stipulations is that through dilution, the original VC firm that put in the money has to maintain the same value that they originally put in. So even if, like, let's say the secondary funding is for $30 million or whatever, well, the original VC firm, you have to make sure that their original investment is still worth the same amount of money that it was when they first put it in.
And once that Series A happens, they've got you, right? They've got you. And depending on where that money comes from determines the level of risk that they got you at. So if it is Sinovation Ventures that's invested in your company that's making a new chip to make missiles, telemetry better, whatever it is, that's U.S. national defense. If you want this funding to continue to keep funding this work, we're going to need a little something on the back end.
Yeah.
Right?
Well,
but it would be easier for them to just kill it entirely by just putting abnormal or unaccomplishable goals on the company.
They don't want to kill it.
Yeah, that's not the point. That's never the point of VC.
But if you're talking about foreign investment, and what
even
it can
even in
potentially do,
foreign investment, they don't want to kill it. They want the underlying technology. They want the innovation. They want the
That's true.
talent. So that's one of the big things about venture capital, and especially CVC or corporate venture capital, is that the goal of that is not necessarily to make money. They don't care if they bleed it dry. They don't care if it loses. They see a technology or an innovation that they want. So they come in, they give that venture capital money, maybe first round or whatever, and they get a lot of control over that organization to the fact of like, okay, well, you've got that missile, guidance chip or whatever that's really good. Well, as a VC firm, one of my stipulations for giving you this money is I want your source code, or I want your
I want it to be
schematics.
manufactured at this plant.
And that was one of the big things. And there's a real world example that is nothing like, is no conspiracy theory whatsoever. And I talked about it in the last one. OpenAI's and Microsoft's investment in them.
Yes.
The whole reason for that investment was not to make money, but to control the talent that was at that company, and also to get the contract to put ChatGPT in every single piece of Copilot.
Microsoft wanted the tech.
Yeah, they wanted the tech. They didn't care if OpenAI ever made money.
Right.
They wanted the technology. And that's where a lot of these venture capitalists are at, especially when you're talking about foreign investments.
Well, but I do think that there is still on the innovation side, because so that's talking about venture capitalism where the investor, in this case, whether it be a corporation or a foreign entity, knows what they want, right? I want the defense tech. I want the AI tech. I'm going to go after that. That's my goal. But there's also the other side of venture capitalism where it is literally just throwing at a wall and seeing what's going to stick. And in that environment, especially with the stipulations they oftentimes put after that, was it Schedule A or
Series A?
Series A. Thank you. I knew it started with an S. After that Series A funding, after that, those stipulations they put in place, like you said, it tends to make 75% of those companies fail. So even if the innovation has already started, because of the stipulations on a company that could have worked under a different method.
I will say, I think that is kind of confirmation bias in a way. I don't really think venture capital is a reason that those companies fail. I think they were doomed to fail from the start. I
think there's a portion of it that is, but I think there's also a portion of it that would succeed under different circumstances or with money that says that, hey, this is going to take a longer time than what venture capitalism is willing to undergo.
So here's the thing, and this gets to both y'all's points. That whenever you start a company, the goal is millions and millions of dollars, right? You got a great idea. You've sold it a few places, maybe around the block, around the city, whatever it is. And you've really, okay, now I've got this thing, but there's where your confirmation bias is, because you're only selling it to a select group that you may have already known, hey, they need this thing, right? Mm-hmm. They need this specific front end for the specific application, whatever it is. There's your confirmation bias. That doesn't translate to the market overall, and does not translate to big money for the venture capitalists, right? So when the venture capitalists see that, they should be conducting due diligence. But there you go again. What they're doing is they're like, it could work. Here's 10 million. Mm-hmm. Right. Yeah. And more likely than not, that company is going to go under.
Right.
And then, the founder is selling NFTs for soup cans or whatever it is.
I don't necessarily have a problem with venture capitalism and in sending out the money to startups that may or may not succeed. Like, I don't have a problem with that. But I do think that there also needs to be a funding avenue for those companies that would not meet the venture capitalist model, and that gives them the ability, like our company. Like, honestly, if we had not been able to get up on the starting and we needed investment from a third party, we would not have been able to get that in any meaningful way without going to venture capitalism, and that would have killed us.
So I will say, just to kind of point on why capitalism or venture capitalist firms exist is some of the regulatory requirements to receive capital. So let's take like market investment. So the reason that venture capitalists exist is because for, let's say, a bank, which is a typical place in which you would receive investment, they require a certain amount of capital assets to back up their investment, or there has to be a certain level of revenue for them to actually invest your cash.
You're going to put your house up for a second mortgage.
Yeah, a house or a factory or whatever that may be. So a lot of times you can't go to a traditional bank to receive funding for a small business. It doesn't work, or something like, especially within technology that doesn't have any physical assets to back up the loan.
Right.
So what it crops up in replacement of this is VCs. The idea of somebody that doesn't have the same regulatory requirements as a bank that can still give over money to these organizations that have maybe a good innovation or a good pitch or whatever that may be, and they still need this funding. There's another secondary portion of this is that the IPO restrictions. Because that's the other way that people typically raise money is through an IPO. The thing with an IPO is you cannot go, now this has been changed recently, but you to a lower degree, but even still, whenever you're talking about a startup, it can be very hard. It used to be $15 million in revenue to even start talking about an IPO. And that's not to say how much money that goes into all the regulatory requirements in terms of reporting and all of this stuff.
Unless it's a special property entity,
SPAC, and that's the whole thing. But even still, that requires some weird stuff to go on. But like, if you're talking about a fully legit company, not a SPAC, because I think it's only like a handful of those that have ever turned out to be anything worth their salt. You have to have something close to like $10 million in revenue to even entertain before they even allow you to start going for an IPO. Again, there's a ton of other costs that go into that. That's just how much money you have to have in revenue to start the process, right? So those are the two normal ways that you would receive capital investment outside of VCs. So VCs crop up, they throw this money into it. Well, so there are alternative forms of investment. The problem is that they're even worse when you're talking about regulatory oversight when they come to them. So crowdfunding is actually another form of investment that companies go after. There's a meme stock called Aptera that did this. They're like a 3-wheeled scooter AV or EV company. Absolutely garbage. Never made like a functioning product ever. But they have been in business for like 10 years. If you look at their life cycle, it's really funny. But they have raised like $100 million from, and you want to talk about pension funds? This is even worse. This is a company stealing money from common people that get wrapped up into hype because they think they're going to hit it big.
It's the next Thanos.
Yeah.
Right? Theranos. What was it?
Theranos.
Yeah, not Thanos. Thanos. Guy. Yeah, he was the purple guy.
But that one was VC capital, right?
Thanos was funded by VC?
Theranos.
Oh, okay.
Well, yeah, Theranos was VC capital until I think they did IPO, but they had a lot of like institutional investors, like big names on their board, which backed like the legitimacy of them. But
I think she was like she was just stealing logos and like posting them like on their flyer and stuff, like this company's invested and this company's invested.
They did have legitimate like true.
No, I know it was not. It was
which again goes back to that being able to be a good salesman and having that charisma.
It was
because that was a lot of it.
That company was valued over $1 billion.
Yeah, at one point. Yep.
Yeah, and VC just kept pouring money after money after money into that, and again, I think it was just a nerd that like.
Well, and
where's the value here?
I wonder how much of it also is partially based off of hype economy.
FOMO.
What Supreme does, right? So once you get to a certain level of valuation, like in your Series A, then your Series B and your Series C, you're more likely to get other smaller venture capitalist firms on board to try to invest in you because they see, oh, look at all these big names that signed on to this thing early on. Oh, I'm betting there's some real money there. Let me go ahead and see.
So there's oh man, what is this term? Richard, you may know it. It's something like the is it last idiot or something? I forget that. No. It's
Why
like
would I know that,
no,
Brazos?
it's like a
Weird.
so-
That's right up your alley.
No. It is a economic, really stock market term. The idea is that whenever you put money into something, you're not the last idiot. Like that's the idea. And I think I'm probably getting that wrong, but it's something to that effect where when you see
get the idea.
the point is like you see this like bar going up and you're like, well, I'm going to cash in now. I'm not going to be the last idiot. Like I can cash out before it tanks.
That's
and
super common in crypto.
yeah, and it has a term. I cannot remember. I think it's something like that.
I'm going to tell you where I'm
the
familiar
rug
with
pull.
that, and that's gambling. 3-card poker, to be specific.
Oh yeah, I remember when you lost some money on that.
Yeah, but here's the thing: if I had a lot of money, I could play what the VC folks play, and that's the long game. If I just keep pouring money into it, something's bound to hit at some point, and maybe I hit that unicorn, right? Maybe I hit the Google, maybe I hit the OpenAI.
Wait,
You know what
so-
they say? Every
so-
gambler quits right before they're going to hit it big.
99%.
So the
stock.
way I look at it, it's opportunity cost, Braz, man.
Yeah.
I don't look at it as losing 120.
So-
I look at it as missing the opportunity to make 500.
You know what's really funny? With that, if you do see it that way, you are completely different than like most humans. In fact, most people are more adverse to loss than they are gain. That's like a
So I've got this. I've got this saying. I've been saying it for years. It's not about what I could lose. It's about what I could have.
yeah. It's contrary to like most the whole behavioral economics field found out pretty unanimously that humans perceive loss more than they do gain. So if you were to lose, like if you had a higher chance of gaining $50, but you could potentially lose $100, you're less likely to take it. But if you inverse that, people are more likely to do it because of the way they view loss.
It's
interesting.
comfortability, right? Like, why would I lose more why would I lose more to gain, maybe a marginal amount? I'm comfortable having what I
Right.
have.
Yeah.
Well, I think when we're talking about VC, it is gambling, right?
Yeah, I mean,
So
100%.
it is.
Anything's stock market and
Right.
Yeah,
investment is gambling.
that's kind of what brings me to, so I'm not big on like, gambling is a sin. Don't ever do that. But at the same time,
We are the podcast.
gambling has some mental health problems whenever it comes to it. Like there is some addiction qualities to it.
Oh, how dare you.
No, I mean, like you look at the electronic gambling, and there is a legitimate issue there.
I don't know what
Sports
you're talking
gambling.
about.
So if so much,
By the way, payroll's going to be late next month.
if so much of our economy is based off of basically gambling tropes, then is there not some greater issue there?
Risk reward.
Well, I mean, yes, but risk reward is.
It is that risk and
I mean,
reward.
yes, it is, but this seems more like slot machines and less like I'm going to look at the risk reward and do like an ROI and figure out exactly where I am, and then I'm going to put money towards it. This seems like I'm going to put quarters into every single slot machine and see what I get.
So we're going to end this. We're going to end this podcast, and I want y'all to think about this. I want everybody at this table to think about this. Venture capital didn't become a thing until last 20 years.
It's actually existed since around 1953.
Okay.
Yeah.
And maybe even earlier
All
than that.
I'm saying is this nation put a man on the moon without venture capital.
Yeah. Well, I will say like one of the very first people to popularize it was back in 1953. It really didn't hit its stride till like the 1990s, .com boom, like all of that.
Yeah.
It's very much as with most of what we're
That
talking
was
about.
very much FOMO.
Yeah.
Yeah, well, and as with most of what we're talking about, it's a new technology that society has not really gotten its full grip around exactly what the implications are and what the consequences are. And we're throwing money at it because of the potential, which I agree with. There's some good potential there. But there's not a lot of thought to consequence along with a lot of this. And this goes back to the AI conversation, the TikTok conversation. and this.
I think with VCs, that is why you get these things like AI. And when I was talking about the whole idea of like in the valuation thing where they're trying to pump it up, that I have a feeling that that's why the AI race is the way it is, because they dumped all of this money into these products.
It's the next hot thing, man.
Yeah, and
that's what it is. It's the next hot thing. It is the banana with the Wi-Fi.
Yeah.
And I want somebody to start working on that in this company.
A banana with Wi-Fi?
Yes.
I'll
If you-
just
Are you
shove an
gonna eat
antenna in a banana.
I'm sorry?
Are you going to eat it?
Oh,
No.
like that
Well, then what's
crypto
the
and-
point of a banana with a Wi-Fi?
If you change it to a pineapple, I can get you one.
Hack 5 would have some issues with me on that. Yeah, but I think, by and large, I don't necessarily have a problem with venture capitalists.
No.
If there's a good idea out there, people should be free to invest in it, right? The problem is the shady nature of what it could lead to. And one of the things it could lead to, pension funds, right? I bet you 99% of the people out there do not know that they've got a 22-year-old gambling with their pension, right? Now, the argument could be made, well, the United States government's kind of gambling with everybody's Social Security, right? But, that's another topic for another day. So, and not only that, where the money comes from, right? Is it fully transparent? I don't think anybody would knock, Jeff Bezos for, pumping money into a startup that had, shoes with Wi-Fi in them. I don't know why I'm stuck on Wi-Fi, but you get my point on that. I think the problem, as with everything, is transparency.
Yeah.
Right. I
And
think
a little bit of regulation.
Well, how do you get transparency, Joe?
Through regulation?
I think through regulation.
Oh, that's weird.
Okay. Well, I mean,
Look. We're talking a lot about, transparency, but this is how I've always lived my life. If you don't know the game, you probably shouldn't play.
amen to that.
Yeah.
Amen to that. And on
Yeah, but
that,
if you don't even know you're playing the game, do you get a choice?
Nope.
yeah, exactly. And on that note, I think we will end. Thank you, gentlemen, for a very robust discussion, very spirited. I do appreciate that. Thank you for everyone for watching. Now,
I would like to put out there that I talk a lot of conspiracy theories. I don't necessarily fully believe all of them.
No,
I just like
He's like
thinking.
7 beers in.
He's
and
nutty as a fruitcake.
Yeah,
Three beers, a
yeah, I've
shot
got-
of Blanton's,
Yeah.
and I'm pretty sure he'll probably finish that one before the day's over.
Well, I mean, he is a stock manager. I mean, that's just kind of how we roll around here.
Yeah.
You got
Well, you got to drink to be able to live in this industry.
Yeah. So,
It's
all right.
true.
So, thank you guys. Appreciate it. Thank you to everybody that's watching and listening now. We appreciate it, and we will see you next time.